Okay, so this is going to be the trade breakdown for the week of August 4th through August 8th. 9 trades taken this week, with 5 of them being on Thursday, which ended up being a tilt day for me, and we'll go over that. But prior to Thursday, we had a trade on the 5th, trade on the 6th, 2 trades on the 8th. And then kind of a blow-up day there on the 7th. So let's start with the first one. So this is the journal that I use, and it lays out everything pretty easily for you. You can click and then just allocate one of these options to the space, and it's pretty easy and straightforward. This is this is from JME's mentorship, so I'm not sure if you can have access to this, but you can just make it yourself. It's easy. It's not a big deal. But let's go to the first trade, being this one here. So it was a winner, 0.32R. You know, some might consider that a break even, but a win's a win. So let's open that up, and we can see here that it was a short with SMT on the high with ES, and this was on the 5-second. So let's get into where I got in. So I missed that initial drop, and so what had happened was the price came back up, and then I got in again, or I got in for the first time here with a type 2 invalidation, rather than entering on that initial CSD and then putting the stop above the high, which would be a type 1 invalidation. And then price rolls down, we go to break even. I move the stop here above that SMT high, and then eventually get stopped out. I could have managed this a little bit better. I could have let it run a little bit more, but that's just not how it worked. So if we look at the chart here, this is the trade. If we look at the 1-minute chart, we can see the entry here, exit here, but the actual exit should have been down here, at least a partial, and then maybe getting out of the trade after that. But, it looks like maybe I missed out on a few 20 or 30 points or something like that. 40 points, which is significant. But really it was just poor management. So you see the entries. I'm going to do the replay mode. That way we can see the SMTs and everything in live action here. So we opened up here, dropped lower, and then we retraced during this macro. So 10:45 to 11:15. Okay. So that's the end of the macro, beginning of the macro, retracement, forming the high at 11:15, which is valid for me, with SMT at the high. Okay, SMT at the SMR. And then if you're looking at this from just specifically the 1-minute chart, this would be CSD, okay, because you have SMT at the SMR, SMT being right at 11:15, displacement lower. You also have ES down here, filling in this IFVG, which would be there, CSD, and then you could take a short on the retracement. And looking back, it just looks much better on the 1-minute chart. There's a lot less noise. So maybe in the future, I consider this and say, hey, let me just stick to the 1-minute chart. Let me just use that as the CSD. And then once we confirm that and retrace, stop can go here, and the take profit can go down here. So it's like a 1 to 2. I mean, not the best risk reward, but it's pretty straightforward. Let's go into the 15 second. Okay, you can see there's not much to look at here. We do have a breaker here on the 15 second. And as well, we have the breaker into a fair value gap. And I would mark this entire gap with the volume imbalance and the entire breaker, which would be the down close candle there before the up move. And this would be the CSD on the 15 second. If we look at ES, let me take these off and let me clean this up. Okay, so if we look at ES, do we have CSD? Yeah, we do. So we have the same formation, except we have basically a mitigation block with ES. So we have the fair value gap and a mitigation block because we don't make a higher high. CSD, so that can be an entry right here on the closure of this candle. Let's go into the 5 second because that's what I initially was looking at because the price action was a little cleaner at the top here. So we have this gap, which essentially is the same gap that we were just using. Price runs down, runs up, closes down below. So we have the same exact thing. We have a fair value gap there, plus the breaker. The breaker would be the consecutive down close candles. And then price continues lower. Okay, so this is when I posted that picture saying that like I missed the trade because I thought I had missed the trade. So this picture here, I posted in the Discord like, oh, I missed it on the 5 second, blah, 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 but it ran back up and gave me another opportunity. This is what I had marked. So if you look closely, fair value gap with the volume imbalance, fair value gap with the breaker. I just used that last close candle. And that's the PD array there. So and then we can cycle through these again, and I'll show you the actual entry there. Okay, so let's go to the actual chart, and we'll take a look at that. So this was a more advanced entry. Let's go to the 15 second, so it's a little cleaner. All right, so we got the retracement, and then what I was using was this SMT. Okay, we had SMT here. So we have this high, we have a higher high, and then we have another higher high on ES, but on NQ we have a lower high. So from here, what I wanted to see was price go lower, turning this into a mitigation block with a fair value gap, and utilizing this as a breaker with a fair value gap. Okay, and then once we close down below on ES, watching down here for the confirmation. Okay, we close down below, and I get in the trade short. Stops above the high there. Okay. And that is basically that trade. So what had happened though was I moved my stop here. Once we ran lower, I used this SMT high to place the stop to reduce risk, and then it ends up stopping me out and then continuing to the target. So in hindsight, just leave it up here at the entry or at the SMR if I would have gotten in at the appropriate time. And that's that trade. So let's move on to the next one. Okay, the next trade was on Tuesday, Wednesday. So Wednesday, no news day. And it was almost a 2-hour trade. So let's have a look and see what that looks like here. Okay, we have a short right at 10. Okay, price moved lower, break even. Okay, and then this is where I took some profit. So price rolled down. ES took the prior cycle low. I took 2 positions off. If you can see, I had 3, or I started with 2. Sorry, I started with 2. So I took half the position off there, and then brought my stop down a little lower, and then got stopped out. Okay, so took profit down here, got stopped out here, because ES took the low. That made me take profit because we had SMT on the lows at a cycle low. So let's go back and look at this on the chart. So Wednesday at 10 a.m. Okay, so there's the Tuesday trade, and then we have the Wednesday short here. Okay, entry there. Exit 1, exit 2. So this was going to be a market maker sell model. Original consolidation down here at 940, and eventual target down here at the low of the day. But that didn't quite work out, but I still made a pretty decent trade, and I'm happy with that. So yeah, so if we look back at this one, SMT at the SMR at the high, right here. Okay, this one is with YM, and what had happened is we formed a mitigation block. Okay, so a mitigation block was formed so we have the high here at 10:06, and then price runs a little higher at 10:09 with ES, and then that high is a lower high on NQ. So it becomes a mitigation block on NQ. And so the closure below that mitigation block is a CSD, and that's a valid confirmation for a short. Okay. So let's replay this, and we'll get into the 15-second chart. It's a little muddy on the 1 minute because you can't see the expansion and retracement. So the only thing we have to work with here on the 1 minute chart is a fair value gap, an inversion fair value gap, which would be here. Okay, so CSD would be here at 10:10. Or if you want to use both of these, it wouldn't be until 10:12. Okay, so when you see something like this, your stop loss is going to be way too big. Okay, you're going to have a 37-point stop loss, and that's just too much. You're not going to have a high enough risk reward. So you can zoom in to the 15-second in this scenario to find some structure. And the structure for this one is SMT at the SMR, and then we have this mitigation block, which was into a fair value gap, mitigation block, ran higher, closed lower, CSD here. And then the entry was down here. Okay. So if we open up ES and we compare the two, I don't enter the trade until ES has CSD as well. So we have high, low, higher, high, and then we close below the breaker here. Okay, so 10-10-45, and then I enter on the next candle. So 10-11 is when I got short. 10-11, that candle dropped lower, got short because you might say, like, why didn't you get short here? Why didn't you get short at 10-10? Because we had CSD. And you're right, we did on NQ, but if you look at ES, it's lagging, and that's an SMT on the lows. So I want that to confirm here. So at 10-10-45, I'll get the entry, because then both markets have changed the delivery, and we're in sync, and there's no SMT. So at that point, you enter the trade, you back out to the 1 minute chart, and then you start plotting the left side of the curve. So we have the gaps. So we're already in the trade here. Okay, price respects that PD array. So we're going to disregard that. And then what we would do, probably just like plot these together. Once you close below this one, you're just looking at this fair value gap here. And then the next area of interest would be here. You have a tiny fair value gap in here, but that's insignificant in my opinion. So what you would look at is this. So you have an order block, bullish order block, you get above, use it as support, run higher. Once we close down below here, you want to use it as resistance. That's what happens. And then price reverses because we have SMT at the lows. Okay. So there's not much to work with on the 1 minute chart. If you zoom into the 15-second, you'll see a few more arrays that you can use, such as this fair value gap and a breaker. Price gets below it, uses it as resistance. That one's not valid, so you could use this. Okay, price gets below it, comes up. You could use this. Price gets below it, test it as resistance. You could use this. Price gets below it, uses it as resistance. Use it as resistance, and resistance drops lower. And then you can just go on and on, okay? Down here. Okay, we get below it, test it, come back through it, and eventually start running higher. And that knocks you out of the trade. So pretty happy with this trade. I don't think I would have done this any differently. Very happy with that short. The only thing I could have potentially done differently is just added more size. So once we got down below and tested here, that was my entry. Possibly could have added here once we're below, especially once we're below this fair value gap. And we come up to test it. You could add more, but that's a little more advanced, and I'm not in that position yet to scale in. Once I buffer the account a little bit more, I can do that, but not until then. Okay, so that's that trade. That's a short. That's a winner. And then let's get into the bad day. So we have Thursday, which was a tilt day for me. Took 5 trades, and none of them were very good. So 0.43 winner, half of an R loss, 0.21 winner, full size loss, and then a 0.3 loser. Okay. let's just start here. I'm going to go through these quicker. So let's look here. So we have a short, we have CSD here, SMT at the high, and this was a winner. It was a one contract trade right at the beginning of the day. Okay, same with this. Drug the stop down to here, so got stopped out. It was really not worth taking that trade. Let's just not even go through all these actually. Let's just look at what I wrote. Okay, so followed protocol, no. Let's see what I wrote. So there wasn't a 3-minute or greater SMT at the SMR, just session SMT and sub 3-minute SMT. So that's not within my protocol, and that gets it a no for the followed protocol section because I need a 3-minute SMT or higher, and that didn't happen. And let's go look at that on Thursday. Let's go back to the 1 minute and get into here on Thursday, okay? So let's just rewind all these. And this was the initial short right here. Okay, right at 9:42, took the short down to the lows. But there wasn't an SMT there. So that's really not a valid trade, and that's something that I shouldn't repeat. So all we had was a larger SMT at the high, and then we had this minor SMT here, okay? So we have a high here and a low here, high here and a higher high. So we have a breaker block on NQ, we have a mitigation on ES. The trade works just fine. It takes the original consolidation, but it's not with my protocol. But this is the trade, so let's just mark it out here. So we have this breaker. Okay, I would just use this. It's within the fair value gap. And then entry once we displace below that. So you could enter here right at the close, and there is no retest, so you're not going to get that trade. 1.48 was like the max R you could have gotten out of that trade. But again, breaks the rules, so let's not even spend too much time on that. Next trade was a loser. Followed the protocol, yes. Let's see what it says. Poor trade management, move the stop too early. So this one was a good trade. Should have been a winner. But I did move the stop above this high too early. And I think we discussed that in the Discord actually, so I'm not going to waste a whole lot of time on that. I'll bring up the photo. So we have 15-second CSD here. Okay, I have an order block. And then we also have a breaker into that order block. Run higher, run lower. Once we close down below that CSD, this can be the entry here in this PD array, which I did enter twice. Price ran lower. I moved the stop. Once we ran lower, we had ES and NQ running lower, but I got too greedy, had too much fear, didn't want to lose too much money, made the stop down here, should have left it at the high. Price came up one more time, and we have SMT on that high, so really it could have just been another opportunity to scale in, but instead it knocked me out. Ran lower, I got back in here, okay, and then that was only one contract. So let's look at that. This was an annoying trade because it should have been a winner. I should have been done for the day. And then what happens is I lose it, and then I go on tilt because I know I should have won the trade. And yeah. So it's here. Okay, the entry. Let's just go to the 15 second. I'll have to find it again. All right. So we're here. Perfect delivery, SMT at the SMR. Up here, okay, we have the high, the SMR over here on ES. We have the high, the SMR up here on NQ. That's SMT at the SMR. Okay, SMR's here, SMR's here. Two different spots. All right. All right, so we have what you can use as just the breaker. But what I did was make sure that breaker was used as support right there. Ran higher, ran lower. This has to function as resistance. And the trade was here. Okay, here, stop above, targeting here. Okay, previous cycle low. Low of the day, low of the New York session. Okay, that should have been the trade. From either there as an entry, like 10 o'clock to 10, like a 25-minute trade. Okay, that should have been it. So you can see entry here when we roll lower, stop out here, re-entry here with one contract, and another exit here. Okay, and I drug my stop tight again. So there's two trade management errors within this trade. This was a trade, this was a trade, and they're documented that way as two separate trades. So we have the loss, and then we have the win. So the half R loss, and then we have the quarter R win being here. Okay. So this is the re-entry. Stop loss should have been kept at the 3-minute cycle high, not down in here, which is exactly what I did again. So I made the same mistake twice on the same trade. That's just unacceptable. It can't happen. So I had moved my stop here because there was SMT. If you zoom in here on ES, we're running lower, NQ running higher. There's SMT. We get to run lower here. I move the stop. It runs back and takes me out. Okay. Really bad management. And that's another reason why you really need to stay on the 1-minute chart, because things become more clear and there's less noise on the 1-minute chart, and it can keep you in positions longer. So if you look at it from the 1-minute perspective, the CSD is not clear. Okay, so it's okay to get the CSD on the 15 second, but once I get in here, my stop goes above the high, and then my eyes should go directly to this fair value gap. And then once we close down below here at 10:09, then I can move my stop to this high here at 10:07. Not until then. And then this is the next best area here. Volume imbalance, fair value gap. You could include one of these order blocks. This is invalid. So now this is the array. We close below, we run higher, and my stop was in this mess here. rather than being up here. Okay. That's just another trade management error. The trade execution was perfect. Honestly, like super perfect here. Bam, bam, 2 entries. And then I could have added another there, but instead I ended up losing and getting in another trade. So small loss on this overall move, but it should have been a nice winner for me. And it's something that I need to get corrected, because these little trades add up at the end of the month. Okay, like these 3 R's, that's 6% for me because I'm risking 2%. Those add up. And what happens is it just runs all day. So, this little trade could have turned into a huge trade. I could have left a runner and collected about 200 points on the day. So, big mistake, but it's a learning lesson. And as you can see, we didn't bottom till like 2:30. So this could have been really nice to hold. So what had happened is that, and then I was disappointed in myself because I know I should have been making money. And then so what do? I try and trade again. So I take another trade here. I see this long opportunity here. Okay. We close above. I enter 2 positions, one on the closure, and then once we retest this gap, I enter again, and price runs down and stops me out because I had my stop here, which was okay. There was SMT there, cycle SMT, and we had closed above. The stop I'm okay with. Okay, the stop was just below here. The entry, not so much. Against order flow. Let's see what I actually documented here. So this was a full-size loss, okay? So I went in with a full 2% here because it was with the order flow that I had designated for the day. But the order flow had changed, obviously. Like it's moving down, like it's bearish. But I'm going on tilt at this point, and you're not thinking clearly. That's why I try and only take like 2 trades a session, 1 per macro. So followed protocol, yes, because it was bullish order flow in the higher time frame. It was in the POI. But the thing was, the 90-minute cycle had already manipulated and was distributing lower. So once price manipulates and distributes, like you can't think it's just going to reverse. It's got to consolidate or continue. We're not going to get manipulation, expansion, reversal. We're going to get manipulation, expansion, continuation, manipulation, expansion, consolidation, manipulation, reversal, expansion. So Turbo knows this stuff pretty well, but it's a good rule of thumb to not try and catch a reversal after an expansion. Like if you manipulate and expand, either stay out or take the continuation, because taking a reversal after the manipulation expansion is never going to work out for you. You might get a couple points on a small retracement, but you should always just look at the higher picture, look at the bigger picture. And in this case, we were distributing lower SMT on both sides of the market, session SMT on both sides of the market, which is a red flag. So maybe I should change this, like that I didn't follow my protocol. I probably am going to change that because the more I read it, I'm like, definitely didn't follow the protocol. Should have stayed out of the market. So SMT, session SMT, both sides. Price had already expanded. It's either going to continue or consolidate. And what does it do? Continue. Okay, so in hindsight, try and catch a continuation long, continuation short. You know what I mean? Like, this was probably SMT on the high. It wasn't, but you get the point. And then what happens? I get stopped out. I see one more opportunity down here, and I'm fully on tilt in this situation. And this is not even valid at all. There's nothing here. There's no CSD. If you look there, like, there's nothing. The 1 minute chart looks like shit. Like, there's no SMT, there's no CSD. Bad trade. And then I'm done for the day after that. Like, I was able to tap myself out and stop. If I'm on a prop account, I'm grinding that out and over trading, probably blowing the account. But when I trade a personal account, it's my own money. I have a little more accountability, a little more responsibility, and I'll stop. So that's another reason I don't trade props, is because I develop bad habits of going on tilt and entering trades that I shouldn't even be in the first place, because of the time restrictions that props put on you. So that's that loss. That's the second loss, minus 0.3. I did go very, very light risk on that. I put one contract on, as you can see. So, it was me just trying to like boost my confidence at that point, and it didn't work. So all in all, that was a terrible day. It could have been a really good day. It should have been a really good day, and it turns into a bad day. And that's a good lesson to learn, because when you're supposed to win a trade and you end up losing because of your own judgment and your own trade management and your own execution, just be done, because you're not gonna get it back. You don't need to get it back. This was the final trade. Here, I didn't even document much because it's just a piece of shit trade. Like, it's not even worth it. So that's that day. Let's move on to Friday. Friday was a good day. I made the recording. You guys can see that. I'm not going to go over these. But what I do want to point out is that the trade was here on Friday. Okay, what we need to realize is that price was bullish. And I really want to go over this again, actually, on the hourly chart. So I'm going to take these executions off. I just can't focus with all that shit on. So let me take these off. If I get it pulled up. And what I want to show you and go over are... Let me just get rid of all this. I don't need any of this anymore. Okay. So Friday, Asia. So what had happened, and what I should have realized, is that we ran lower, okay? Like, we're bearish. Breaker, boom, bearish, bearish, bearish. What had happened is we had already violated the PD raise. Like, if you look at this, we have a breaker, we have a bullish order block, support, higher, lower. That's got to function as resistance. So we had already changed the state of delivery here at 3 p.m. on that day, Thursday. So when we came into Friday, and if you don't want to use that, that's fine. I mean, I don't know why you wouldn't want to use that. It's perfect. You can use these as a breaker, okay? Violates that. You can even use these. Fair value gaps, okay? Let's just like narrow it down to a few here, to one. Violates that. Use it as support. I mean, it's violating all these PD rays on the left side of the curve that should be acting as resistance. Asia, support, boom, higher. Missed it. Okay? Just missed the analysis. I was looking too far away from price. Okay, that's why you need to look directly into price, directly at the level that we're at. So, we had violated all those. There was nothing really at all that was bearish about this. So we go long. And on a no news day, I'm telling you guys, you got to look at the first macro, 8:45 to 9:15. Consistently gives you a nice reversal. London SMT, right there. First macro. Okay, at London, 1, London 2, London 3. New York AM1 manipulates SMT with ES. Now, I don't love the SMR, but we do have SMT at the SMR because we never took that out on ES, okay? So we've made a new leg, we've made a new expansion, and now this is the SMR on NQ, and the SMR is still back here at Asia or in here at London on ES. And then what you can see is that, it just really respects that left side of the curve and runs it all the way up. So we have the SMR here at 821, and then we get into this first macro, and you can start working on trying to get a long position. And then by the time we open, boom, 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 we're off to the races. If you're still hesitant, because we have SMT at the highs, let's just wait till we clear that. Okay, we clear it. Clear it here. What time? 9:45, all right at the macro. And then, you can find a continuation long, which I know some of you did. Maybe one of you did. 9:42, cleared it. You can try and find a long and get long. But really, that's chasing, in my opinion. Like, you're chasing price. And the only reason you're chasing price is because you missed the actual SMR. You missed the actual reversal. That's why you need to look at the first macro of the AM session here, right before 9:30 open, when there's no news. Because you're long, you could already be long, you know what I mean? Like, you close above here. You could use these fair value gaps as the CSD. Okay, close above, long, holding some drawdown, boom, 9:30 takes off. But your stop loss is below the SMR, so you're good. Okay, I'm gonna wrap it up here. A little longer than I wanted, but I'll get better at these. I'll get these tightened up a little bit shorter. But this was a lot of trading for me. This was a lot of trades. So 9 trades, that's a lot. I don't do that in a week. As you can see, like July in total, 12 to 32. I only took 20 trades in July, so I'm already halfway there in August because of one day going on tilt. So that really can't happen. I'm lucky, honestly, to be profitable this week. Okay, came out of the week up 2%, which is up 1R. So minus commissions, break even week. But I'm okay with that because I made some pretty good mistakes this week, and it's all part of the game.